as well joins in on the show. Sudip, hi. It's a problem of plenty, I guess, within the industrial space, right? But let's start off with the pure play cap goods names, be it L&T, BHEL, or even the smaller ones. What do you buy more? And do you buy at all more at this juncture after the kind of spurt and run-up that these stocks have seen?
Well, I think, it's a confluence of factors which has, kept these stocks moving. As far as L&T is concerned, we have been talking about the hydrocarbon, opportunity which is there, definitely there for L&T, and that has started materializing. Look, with global oil prices moving up and almost, hovering in the range between 75 and 90, I think a lot of opportunities will and are opening up in the Gulf, and pretty much those hydrocarbon opportunities have started crystallizing for L&T. I won't be surprised if there are more such opportunities coming L&T's way, because they have a name in this market for quite some time, and they are one of the well-reputed players in this space. So as far as L&T is concerned, I think it's only execution. All of us will have to focus on the execution efficiency of L&T. There will be no dearth of orders or the order book, size. So execution will be the key, and I think if somebody is willing to take a long-term bet, L&T definitely is a good buy. There may not be any miracles in the short term, but if somebody is having, let's say, 2 to 3 year time horizon in mind, even at current level, L&T is a good buy. I will say the same thing for some of the other cap goods companies like Siemens and ABB. I think it's a secular positive cycle for cap good companies. The appreciation and the opportunity may not be as much as what is there for L&T, but even ABB and Siemens should do well from current level. So somebody with 3-5 year horizon, ABB, Siemens at current level does look good. As far as BHEL is concerned, I've seen the excitement around BHEL. They've been winning orders left, right, and center. They definitely are the big beneficiaries of rejuvenation in the thermal power space. NTPC has been placing orders on BHEL, and the stock is definitely excited. I have, why should I single myself out? Pretty much the entire market has very negative, experience with BHEL over many years. The execution always is a problem, and I will be very cautious. The large order book probably doesn't mean much unless it's properly executed, and we'll have to wait and watch. Now, this order book doesn't translate into immediate revenue. It will come only over a period of time, and it all will depend on the efficiency of execution. So while it is good, I don't think I will recommend buying into BHEL at current rates.
In the last month or so, there have been a lot, not just a 32,000 crore potential order for L&T from Aramco, but there have been a lot of mid-tier companies. Voltas, of course, is also one which has exposure to the Middle East. The sense is that, Bin Salman, the Saudi chief, would also be visiting New Delhi after this G20 meeting and have their own Saudi or Middle East India investment forum of sorts. You have spent a lot of time in the Middle East. If I'm not wrong, you do have an office in DFC as well. You understand the psyche there. Do you see a lot of beyond oil and hydrocarbon related businesses also seek partnerships here in India? Which are those sectors where those flows will go?
Well, absolutely, Ajay. I think there is a big talk going around putting up a rail connectivity between the multiple Gulf countries. And if that does materialize and some such announcement does come in, I think it will be a big game changer for Indian railway related companies. We have been seeing these stocks getting excited based on the orders they're getting in India. Now imagine on top of that, if they start getting orders from the Gulf, I think these companies will move to a different level. Of course, the entire Gulf region, particularly UAE, Saudi, are kind of competing for projects and execution. Both of them are putting up fantastic world-class or world-beating infrastructure in place. So the entire infra space operating companies have a great opportunity for the next couple of decades probably in the Gulf. And some of them, as you rightly said, L&T, Voltas, many other Indian companies are also establishing themselves there or already established there. They will have great opportunities. So there is definitely a boom in the Gulf, and the beneficiaries will be the companies which are established there.
Okay, let's get in some buzz as well across dealing rooms as we begin winding up for the day. And Sharad is here. Sharad, I believe Happiest Mind is the stock that dealing rooms are a buzz about.
Yes, a buzz coming in the mid-cap IT space, and we are having Happiest Minds, which is in focus. And what we're hearing from the dealers is certain counters, FI buying is being seen. Now, do remember, overall, if you look at the volumes also, that has come up almost 6 times its 20-day average. And interestingly, in today's trade, an important technical indicator also is crossing. That's roughly the 50 DMA as well. Now, also do remember that roughly FPIs are having 4.5% stake in the company, and the key FIs already invested in the company includes the name of UK-based Plutus Wealth as well. Now, company is also expecting on the long-term basis that they'll be able to touch the $1 billion revenue mark by the year 2031 itself, and in the month of October they will be actually giving out their guidance also, especially on the mergers and acquisition front as well.
Thanks very much for that. Happiest Mind. Look at the long-term chart. It has the shareholders were very happy when it got listed and sometime later as well. But there was a very marked derating of the stock afterwards. Look at the 5-year chart and you would see where it has gone and come back. But it appears that institutional interest is coming back gradually. Also, pull up Bombay Burma. That stock is almost 15% higher now. Yesterday, if you remember, Bombay Dyeing was rallying in trade. Today, it's the holding company Bombay Burma which has shot up 15%. Well, the trigger is that last of the marquee and large plots in the most poshest area of Mumbai, which is Worli, is being sold off, and the Wadia family via Bombay Burma and Bombay Dyeing has a big share out there. The arrangement has happened, and Sumitomo, the global chemical major, will be picking up that. So the value will be captured here, and that's why the buzz on the street is that Bombay Burma could give out a big special dividend. So re-rating move happening over there. Shilpa, this is not a FNO stock, it's a cash stock, but volumes have picked up and there is interest there. What do the charts tell you there?
If you look at Bombay Burma, like we are looking at the charts right now, it is well poised for targets of 1345 to 1360 on immediate basis. And if we sustain that, then extended targets of 1445 to 1500 zones opens up.
Okay, Sudip, do you have interest in any of these? Because this is becoming a challenge now for market participants to look for value. And it has come down to that level. People are looking for holding companies, which actually usually trade at a 50 to 70% discount to operating company, because nothing is cheap or deep value anymore. So probably might as well try your hand at some of these holding companies. Is any of the holding companies on your radar?
Well, I think one can look at Godrej Industries. I think they have all the other Godrej companies holdings in that company. And pretty much all the operating companies in the Godrej group are doing pretty well. So Godrej Industries from a holding company point of view also can be looked at. Apart from that, as such, not many holding company comes to my mind. Some of the holding companies which have got fantastic holdings are not in the public domain. So there is not much one can do about it.
Okay, that's the take coming in on some of these holdcos which are finding the fancy in the market. But let's just revisit what some of the other buzzers are, and continues to be the likes of a PFC, REC, Havells, BHEL. It's pretty much, more of the same that's actually putting on more weight and contributing to today's move. L&T, of course, is now charged up about 2% or so. Tata Motors, Hero MotoCorp, even Reliance has spiked up a good 1% as we speak right now. Shilpa, if I could just quickly get a chart check going on Reliance, which has finally seen a spurt. Of course, news-based move because of the news on NVIDIA and the semiconductor chips. But that, along with HDFC Bank, which has slowly and gradually finally seen a rebound all through this week.
The big boys, Reliance and HDFC Bank in the market, they are the one that they are the one rallying up, and which is why we see the indices making highs now. Talking about HDFC Bank, we have seen this move coming from 1590 zones very strongly towards 1630. From here, I'm expecting a target of 1660 to 1680 zones in a couple of days sessions here. Talking of Reliance, we can expect targets of 2500, but it has to sustain 2480 to 2500 zones for higher targets of 2550 to 2600. The support comes very strongly at 2420, so one can attempt along here and stay intact.
Right, okay, that's the take on Reliance as well as HDFC Bank. What's not looking good today? Let's see that as well. So you've got a Glenmark, Lalpat Labs, largely pharmaceuticals has been a little bit on the sidelines today. And the same can be said about technology too, although this week was not all that bad for the Nifty IT constituents. But today you're seeing a flat move for Infi, marginally soft for TCS, and that can be said about the rest of the IT pack as well. Sudip, you track some of the mid-cap IT names very carefully. Still a buyer there, still adding positions? And if so, what is it that you would recommend within the entire IT gamut?
Well, Aisha, we are looking at the sectors which are rapidly progressing and where the demand is pretty strong. And the IT companies, mid-cap IT companies, which are servicing those sectors are in our radar. So one sector which definitely becomes attractive is travel and tourism. I think there's a hotels, travel, tourism. There's a major boom going on world over. And the companies which are catering to the needs of software and technology needs of this sector definitely are and will do well, continue to do well. So Coforge is on our radar. Railtail Systems is on our radar. And if you see the commentary and the performance of these companies last quarter, or the management commentary post the results, it's pretty much clear that they are on a very, very good wicket. And these shares, though at elevated valuation, but still can be picked up based on the coming growth potential.
Sudeep, Morgan Stanley put out a very interesting note today saying that one of the biggest issues of the concerns of the industry, which is orders drying up and order book looking weak, if I can call it, for IT companies, seem to be turning the tide, and now visibility is emerging for the second half. Meanwhile, without even listening to the management, the stocks have rallied from previous quarter to now almost 20-30%. Mid cap IT, large cap, anything on that universe which you like right now on valuation basis?
Well, I think if you look at what's happening, I think valuation-wise, Infi is looking attractive out of the top IT companies. And there has been order wins. I think TCS won the JLR contract. Infi got, I think, the Liberty contract recently. HCL Tech won a large contract a few days back. So yes, the order wins are coming. And, relatively valuation-wise, Infosys is looking attractive. But having said that, I think I will still reiterate what I've just mentioned to Aisha, that I would like to focus on mid-cap IT companies which are catering to travel, tourism, hospitality sector, and opportunistically take position there.
Okay, that's the take coming in on some of those IT names. But it's